and gentlemen. We had some microphone issue for just a few seconds, but we're back online. Thank you for being patient. My name is Joseph Novichkov. I'm the Senior Trading Manager with GDM. Welcome to today's webinar. It's Friday, December the 16th, and of course we are undergoing our first webinar for the series of the month of December. Now, as you might notice, there are quite a few more topics into this month's webinars due to the fact that there are a lot of important aspects that we need to take a look at when we approach the market, especially in the beginning of the next year, the first quarter of the year, so on and so forth, what we can expect until the end of the next year, of course. The usual things that we normally do every December. However, as a fact that it has been repeated since last year's December is one thing that happened again. This is the interest rate increase in the US, as we can see, with 25 basis points, as well as the prior year, the same time. Now, all of this led us to believe that it's better to take a little bit more time to prepare the necessary topics for this month, and they would be extremely relevant for the first 4 months of next year. Basically, this is something that you can work on. Therefore, today's topic, we will talk about a little bit of let's say dry matter. Basically, it's a little bit more number crunching today rather than anything more technical onto the chart. But the fact that I'm starting with this is simply because you can start using it from Monday, so you can get ahead of what is going to happen next Wednesday when we talk about the next line of topics where we're going to talk about more fundamentals and technicals. All of this is connected, so please be patient with me. Let's take all the numbers, see what we have. Today's pivot point support and resistance levels, it's a bit more complex level of this type of trading, and finding exactly where the market could be able to reverse, where it's expected to take support, and of course where it could resist at any point. And of course all of this in today's session. But first of all, taking a brief look at what pivot points are, for example, and why are they significant. Because let me give you an example. I can give you the very easy way for you to use this particular type of trading by just giving you two exponential moving averages and moving averages, convergence, divergence. All of this is support, resistance, and pivot points. However, the more complex approach actually can get you prepared from the beginning of the week until the end of the week. And on top of that, you can actually focus on a larger 30 minutes, 1 hour, daily charts, weekly charts, monthly charts, and all the data that we're squeezing from the historical events happening on the chart. All of this we can use to trade much more appropriately today, and it's not going to be, it's not going to look like you're gambling on the market. Rather than that, you will be actually doing work as it's supposed to be. So, speaking about pivot points, one slight deviation to say is that the prior usage of this particular, those particular formulas and way of trading, it's been used on the stock exchange floors. Basically, those are key levels where professional traders used to determine market conditions and possible moves for on an intraday basis, on daily and weekly basis. So that can actually help them determine future market directions, which is actually a very important aspect, as everything comes to the market direction itself in order to be profitable. Otherwise, everything else is just speculative gambling, something that you're using so far is probably not very clear. But the original idea is to use, for example, to trade 1 minute, 5 minute, and 15-minute charts by taking data from the prior day. So you have to actually use the daily chart to determine, yesterday's daily chart to determine today's moves between the smallest time frames. And also, you have to take, if you want to use the trade on, let's say, 30 minutes and 1 hour charts, you have to take the prior week's data in order to better determine where your support, resistance, and pivot points lie. Also, if you, of course, want to be, an investor, you don't have too much time, to trade, and you're mostly focusing on weekly, monthly charts, of course, you have to take the yearly chart, which is not here. I'm just going to put it there because you're going to switch on a monthly chart and you're going to start counting, writing down, and calculating all the necessary things if, of course, you have not robotized this particular system to calculate all of these things for you. And of course, the easiest way is to use the so-called standard pivot points. Okay, that's something that is extremely important at this stage. So let's choose another color, better color, brighter color here, so we can write the formulas here. Now it's going to be a little bit difficult, so I'm going to be slow here. We're going to use the, to find the pivot point, we have to use the previous day high plus previous day low plus the closing price in order to find that pivot point, and of course divided on 3. And this is the first way to approach every week. Now if I'm going to trade on that 15-minute chart, the first thing I have to do is simply go to the daily chart, okay, see what is happening here, and this is today. All right, it's obvious that we're already in this trade, but let's say today is Monday and we're starting to calculate our pivot point, support and resistance levels as the most efficient and appropriate way that it has to be done. Then we have to take the previous day high, which is the extremum over here, and this is the price of 1.0523 or 24. I would go for 24 because you can never, you can never just be exact in all of these by just determining which level. But yes, it's 24. This is what you pretty much need. The next one is the low here, and this is the extremum of 0.366. 1.0366, and of course the closing price, which was down here. This is the lower range level of the previous day trading, which is 1.0415. This is the closing price, and all of this you have to divide it on 3, and this is going to give you today's pivot point, which is, we have 1.0524 plus 1.0364 plus 1.0415, and all of this divided on 3, we have 1.043433 period, which lies somewhere. Let's see where it is. 43, basically this is what we're looking for. Somewhere here. And we go back to that 15-minute chart. Now what do we see here, ladies and gentlemen? we see that every time the price reaches that particular level, faces difficulty to go either way. So that means that 1.04343, this is our pivot point, which from then on we're going to start looking for our support and resistance levels. Now, finding these levels, of course, we're going to use furthermore formulas. The first support, of course, S1, it comes to the pivot point multiplied by 2, subtracted from the previous high. So we already have that data. We don't have to go back to that daily chart because we already have the high, low, and close. We only need to find what is the first support level. Now, for support 1, we have our pivot level, which we already know, 1.04343. Okay. Multiply by 2, subtract the high, which is 1.0524, and we're going to get 1.0344. Where is that? Let's find it. That should be 1.43, 34. 1.34. Lower, lower, lower. 46. There. Somewhere here on this level. Now this is our first support. Now for the resistance, of course, it's the same way, but you have to subtract the low instead of the high. Which means all the same here, but you have to subtract the low, which goes for 1.04343. Again, multiplying by 2. And subtracting the low of 1.0364. Just a second. 0.4343. 1.0504 is what we've got. 0.504. Or 0.5 doesn't matter. It's 1 pip, which is not that significant. Now what we have here is a 15-minute chart with a daily range in between which, ladies and gentlemen, the market could be expected to hover around for the remaining of what is your trading day at this stage. And your trigger point is obviously the pivot levels. Now, everything here in the middle between these levels, of course, you can still get more levels like these, but using smaller time frames. Now, we've used the daily chart to find today's possible range. As we can see from over here, the market has started to decline on that particular trading day. And we can see that it's still relevant today. We see the pivot point, denying the price at some stage, or it's actually breaking it on a high volume levels and taking off to the direction of that support level. Also, it's the same to the upside. You can see the large volume candle here. Let me get a little bit closer in, the high level, the high volume candle is breaking it, another one to confirm, and then you have further upside to the direction of that particular level of 0.504, which is of course this daily range. It might not be reached, that's obvious, but we know which direction the market is going to go. We have a level for a target to the upside, we have a level for a target to the downside. All from here is whether you want to choose any other technical indicators to give you more smaller, let's say, technical support and resistance levels, or you want to take the 15-minute chart, but for smaller time frames, like the 5-minute, and you want to take the 4-hour or 1-hour chart to determine smaller support and resistance levels. This is also up to you to decide. For me, I don't want to complicate too much my chart. I know exactly which way I'm going. So if I see something like this, large volume candles, of course, I might do a step trading, you know, open a large position like, let's say, for example, one lot for the first 30, 40 pips, for example. This is about 35 pips. I'm going to close half of the position towards that particular mark. Now, the next half of position I'm going to split on two again, and I have 3 particular targets. So the first one comes on the 40 pips, the next one comes on the 20 pips, and you have another 20 until your full, let's say, 70, 80 pips of goal to the upside, and pretty much the same amount of pips to the downside. Now, for a daily range of a liquid, volatile pair like the euro-dollar, or the pound versus the dollar, or for example the euro versus the GBP, or any other major currency pairs that you might think of, you know, this particular range is nothing for a pair like this one. It could be reached within an hour, or it could take further longer in time, like today's Friday. We can obviously see that it's going to be a bit of a sluggish trading, because all traders are considering their profits rather than waiting for another few days to find out whether the market is going to keep going in their direction. Or you can, of course, place a stop loss, for example, somewhere below these shadows here, below the ranges, somewhere here, for your final 2/10 of that lot that you opened initially, in order to be protected enough, because you have already realized half of the position. Now you have to realize the other half, of course, if you have not closed the whole thing already. Because if with the next 3 to 4 hours until I'm in the office, that position have not reached these levels, because the US market have not even opened yet. So you can see whether we're seeing something like this in the European session, with, well, what could be in the US session? It could be the other way around, of course. If that stop loss is hit over here, of course I'm going to take the other way around. If I see another volume candlestick going further down, I'm going to take the same position, but on the reverse side. And what you have is a daily range trading. Now, if that level breaks off, you know, on that 15-minute chart, that means it's trading, trending market right now. It's not ranging, which means you're going to need to make a bit more analysis, okay? That means you have to go, let me see my notes here. We have to go for the 30 minutes to 60-minute chart. Let's say a 60-minute chart. I'm going to remove those formulas. I hope you already get it. I'm going to give you later on the support level number 2 and the resistance level number 2 on that small time frame. And this pretty much is going to come somewhere around here, and the other one is going to be somewhere around these levels here. Okay, so you have for a trending market. Now, if you see that the market is trending like this, for example, because that's 1 hour chart, this is the whole week here until Monday to Friday, okay? Now, that means you have to go on the weekly chart to take the same range on the previous week, to apply it on today with the same formulas, and of course, have a trending market, a range which is going to be much wider. That means you have lower support levels, not only these two, okay? In other words, you can prepare from the beginning of the week for intraday trading, weekly trading, and you will have some kind of vision for the whole month ahead. Of course, that will be with comparison to other technical levels, technical indicators that we will talk about further on throughout this month's webinars, because this is not the whole picture. You're seeing fragments right now. The first session is always the first step into getting into the market. So a little bit more about this month before I keep going with a little bit more number crunching, because we need to talk something about the support and resistance levels. Those are things that we need, because levels like these are also important. We need to find out what we know about these levels and how we can apply it to to normal trading today. Because if you're trading on that 15-minute chart, you always have to know if this current trend is going to continue for how long. Therefore, levels like these, okay, the support here, it's going to be important here, obviously, because it bounces up from it. And then we know that when this pivot point is broken, our upside is likely to proceed. But that of course, is within a matter of minutes. Now, the connection between fundamentals and technicals this month, ladies and gentlemen, we're going to make by taking a bit more detailed evaluation on what happened during this week. More of talking about the interest rate hike in US, how that will of course affect major currency pairs, commodities like gold. Also, we're going to talk about the OPEC and the agreement to cut production with other non-OPEC producers like Russia. Also, why Kuwait actually announced this morning that they would actually cut production more than the markets have actually anticipated, which of course made the commodity came another $1 up, and that's kept it throughout the trading session, which means factors like these are supporting the commodity and everything else. But what is the connection between the Federal Reserve? That means a stronger dollar, gold and oil, and other major currencies are denominated in US dollars. Of course, the strength of the US dollar will always have an effect. For how long and where exactly we should start pricing in our positions, how to reevaluate what we already have, so on and so forth. So that's why everything is so important. And the first step that we're taking today will actually set the beginning of a type of a chain reaction that will last throughout the first 4 months of next year. And of course, as professionals, we need to be prepared for everything that is coming ahead. Now, speaking of support and resistance, to get back to our main topic, levels based, of course, on pivot points, okay? They can be used just like traditional support and resistance levels, but of course the key is to watch price action closely when, of course, these levels come into play. Furthermore, prices, of course, should decline to support and then start firming up again. The normal way of which we are using the support and resistance levels, we're looking for a successful test and bounce off of type of support. It often helps to, of course, look for some type of bullish factors or signals, as we call them, to confirm the upside and that particular support that has already been found. This, of course, is pretty much the same as some people call them as a price hike to resistance and fall, if you're following me. That means if a resistance to be broken fails one time, it cannot fail 3 times. And if it does, imminent downside is to be expected. This is one thing that we are having here. Okay, be careful with these things. Now we have a low, okay, and a high, which is over here, apparently trying to test that pivot point level. A second test here comes into play, but before then, one and the same level of support has been tested, which we call it support 1. Now these support and resistance levels over here, do not get mistaken, this is your daily range support and resistance levels. So you can call it as support 1 in brackets on daily basis, because this is what you've actually calculated on the base of high, low, and close from the previous daily session. Okay, and the same thing for the resistance here. These minor support and resistance levels, they could be broken, many times throughout the day. But those levels, they don't move. But these levels do, because once you have a support here, but when it's broken, it's no longer support. Now it's a resistance. Okay. But when this level breaks, for example, and the market continues moving down, then you don't move this one. You have another one, which you have already calculated on the basis of the 1 hour and the weekly chart, which you have already started your week with. Okay, are you following me here? I hope you do. So all of this is in the matter of these daily ranges and the pivot level here, which is actually predetermining the levels in which the market would be moving throughout the day, and they're constant. They do not move. But when this level appears, now you have a support from where to look when the market starts breaking off. And we can see 2 tests. On the third one, the market makes a break off. The first time the market appears above that level, and on the second time it breaks off, which means it sets a direction, a new one. Now for this level to find a resistance here, we have a level like this one and this one, but these are even smaller resistance levels, weaker resistance levels than this one, because neither of these have been confirmed. You have not had a market that's tested it twice and reversed direction. Now if this level breaks, the market direction and the market move to the downside would be massive. Basically, you can expect a very large leg or a candlestick. Okay, I'm sorry for the very ugly drawing. Please excuse me. Quick, very fast profit or leg that is actually expected to test this one. Now, if the market goes up to here and resists one more time and reverses down to test that pivot point, this would be the same condition as in the beginning here. So you have market condition number 1 and market condition number 2, which could be pretty much one and the same, but are mirror images of themselves. So once you have a position here, but if the market resists here, because it's still not happened, now we're yet to find that out. It could happen with the next few sessions, or it could actually persist for quite a while until a condition like this one appears in a position number 2 here. For us to take a lower direction throughout the pivot point. So a theoretical fact here is a resistance number 1, where the market bounces off of this level, off this bearish evening star. This is also something that you have to be looking for. Okay, 2 bullish morning stars here, and a bearish evening star and a bearish evening star, but the pivot point is supportive enough for the pair to keep moving higher. Now that means your long position is still in play because the pivot point is intact. So you have your 1/3 of the last position still going for that higher level. Okay. Now if that level here, theoretical resistance 1, it's yet to be confirmed, is broken, that means the move to the upside could also be expected to be very massive like this one, because it's still a resistance, yet it's minor, but if the market breaks on a large volume like this one here happened throughout this one, that means a third type of scenario is going to play out like this one. One peak, one fall, one peak, one fall, another peak, another fall, and this is typical for trending market. So these conditions, when they start repeating, you have a trending market, which means slowly, surely, the exchange rate of the euro versus the dollar will be reaching for the 0.05, the 1.0504 level that we have predetermined as our daily range. But if the price action fails to break off this range and start closing down below, this is already a confirmed full resistance 1 level like this one, and you have a scenario that it's yet to determine which direction the market would go. Now if the price starts testing, like this one, of course we will have a major issue if 2 candlesticks close below that pivot point level. We can see one of is breaking below it, closing out of it. The second one is closing above it again, and the market continues up. This is a failed test, which we already know. It's happening on the market many times, like this one here. But the second time is a success because it's on a large volume. So basically, a candlestick that breaks a key point, key level, cannot be on a very tight volume or a volatility. It has to be massive move for it to be able to be sustained. Then the market should close outside of it, and then you can consider closing your first half of the position if the price action didn't hit your stop loss already. But then you have another direction, which means your new position should be to the downside. And this is the basics of support and resistance and pivot point trading levels, and this is just today. So basically you have already traded one lot successfully, 0.7 lots out of it for now because it's still in play, your last position, whether it's 0.25 or 0.30, it's up to you to decide. It's not that much of a problem of 5 micro lots. So right now that's for you to see how that market will play out and to see that it's a repetitive move. It continues like this, goes and goes and on. It was going on like this for the past few months. When we were having our webinars in October, okay, I was preparing this one for December. So basically, it's been already tested. I've seen how it works. The patterns are there. You have to find them. But everything that I'm doing this month for you will give you a pretty good advantage on the market for the next 4 months of 2017. So that's all about the session. Nothing complicated. It's a very neat way of trading on pivot point, support and resistance, and price action. This is one of the classical ways, but it involves a little bit more of a calculations, because using these, you have to use the same thing for 1 hour and weekly charts if you want to have a more wider range of trading opportunities, and also especially when the market starts trending in an upward direction or downward direction, you definitely need more options, more opportunities, because you need to know if the market is going downwards to what end. You need to know to what end, because if you don't have a target, basically you're just jumping in a deep water without a diving suit. Basically that's what it is. Anyways, you can see that when the exchange rate tries to break off a type of a level that it's right now strengthening in resistance, you will see even faster retreat to the downside, which gives you multiple opportunities to trade not only, but to have a direction. Having a direction is pretty much the most important thing. Well, thank you very much, guys, for joining us. I'll see you next week on Wednesday for our second webinar for this month, which is also very important. Don't miss it out. And of course, take the weekend to review one more time of what we've been going through today. Start testing it from Monday if you want on a demo account, if you think you can rely very well on your calculations and you're ready to go live. That's also up to you. For any other questions, whatever that you have, get in touch with us. You know how to do that directly on our phone line, or you can just go on our website, gdmfx.com. Immediately from the bottom right corner, you will have a pop-up chat where you can forward your questions. If the colleagues are, have the opportunity to answer to all of your questions, they will do that immediately. In other words, if they need more of a professional intervene, we will handle that personally. And of course, you can go ahead, tweet on Facebook if you wish, like us, rate us, and of course, I'll see you again next week. Thank you very much for joining us. It was a pleasure. See you next week.